is ripping.
My tummy hurts.
Pretty good, right now. Hey guys, what's going on? Nick with Off the Chart Trading. I'll be doing the video tonight for Tuesday the 28th, the last Tuesday of the year. It's crazy how time flies, but anyway, let's just jump right into it. Figured I'd start with Google. I actually ended up getting out of this trade. I ended up getting in yesterday. I really like it, and I was thinking, I don't know if you want to call it a Santa rally, end of year rally, just I figured that we would see a little more strength, and we might see it tomorrow or into Thursday. I wouldn't be shocked if Google hits all-time highs relatively soon. Soon, obviously, is relevant to the person that's saying it, but I would probably say over the next few weeks, I think we will see new all-time highs in Google, which is not much, a little less than 100 points from here. Has that nice daily squeeze. We got that 821.34 cross yesterday. It already gapped up in the morning, so by the time I got it, Google was already up like $17 or $18. And it's one of those things because it did go higher. I was up, I think, like 15-20%. And obviously it's always going to be hindsight in the sense of, well, it should have been a quick day trade, take the money and run type thing. But I was looking for potentially an open higher. And we did open up a little higher, but not much, and then kind of came back down. So I'll say on the higher time frames, Google looks amazing, but when you have options that expire, Friday, time's not on your side. So I think I did the 29.50 calls. I only did a one lot. They were going for $30, so my break even would have been what, 29.80. Can Google be above 29.80 by the end of the week? Yeah, it's a possibility, but I don't. Every day that goes by with theta and everything, I just don't try to play it because, even though I'm always comfortable with the trade not working and I'm always risking the debit paid just to see how the trade goes, whether you call it experience or risk management or whatever, just looking at something and you just run the numbers in your head. Do you really think Google's going to be up 50, 60 points in the next 2-3 days? Go from there. And then, I did the math. I'm just like, I'd rather just get back. So I think I ended up closing it a little less, I think I closed at about 45% or so. So pretty close to that 50% mark. It dropped a little lower after that and then rebounded a teeny weeny bit from the lows. But main reason I wanted to go to Google is it was one of the only things I ended up doing today. Was pretty much like watching paint dry, which is not too crazy considering the how we ended up last week and how we ended up yesterday. So to have a balanced day or just a day where we don't really do too much, I don't think is too crazy. But most of tech got hit pretty hard today, but I just wanted to say and show that Google does have a nice setup, and I wouldn't be shocked if we end up seeing all-time highs relatively soon. It could be this year, obviously, and then, I do Thursday's video, and Google's at 3,000, and if we held, we would have been up X amount, but I don't try to live in the past, and hindsight's not really much of a trading technique, so... Anyway, figured I started Google just mentioning I got out, even though I got in yesterday, and we didn't do a video last week on Thursday right before the holidays. But anyway, oh shoot, I didn't even notice the ES squeeze on the daily is firing long as of right now. So it's futures contract, so a lot can happen in the next, because 12 hours, whatever it is, 14 hours from now, give or take. Just from when I'm recording this, but as of right now, the low one is firing. The regular one fired long a few days ago, so we are seeing a little follow through. We did end up hitting new all-time highs at 47.98. I mentioned in the room this morning that I wouldn't be shocked if we slowed down right around or right below 4,800. The fact that it's off by 2 points, I think, is pretty close. So I wasn't too shocked that we kind of catch our breath and trade somewhat sideways today to down, and maybe we end up breaking above that, whether it be overnight or maybe sometime tomorrow, and see if we can break above 4,800, maybe go a little higher. Then who knows, maybe we end up pinning around that going into the end of the year. But ES looks good. We're, after today's action, it closed right below the Bollinger Band, so maybe another day of sideways action, then breaking higher. We'll have to see. I don't think we're going to see much selling pressure. The NQ one also firing, regular squeeze firing along as of right now. Once again, I'm recording this at 7:50 at night, and a lot can happen over the next 12, 13, 14 hours. Not to mention until it closes tomorrow at 5 p.m. So a lot can happen between that. So that might go back to being a red circle, but we'll have to see. But the NQ, very similar setup. It did not hit all-time highs yet. When the ES hits all-time highs, it's safe to say the NQ will. I wouldn't be shocked if it's this week. I mean, what's another 200 points, 150 points on the NQ? So I wouldn't be shocked if we see that before the end of the year. Let's take a look at the RUT. Also has that squeeze setting up. Be nice for it to break above its 50 and get going. It's obviously the laggard, but as I've mentioned in previous videos, we still have that weekly squeeze. I mean, it's been in a weekly squeeze majority of the year going back to April. And then we did end up having the high compression get us to all-time highs. A little bit of weakness since, but it is finding its footing here. So obviously a lot of the stuff I have, some of it's in the Russell, but I consider the Russell risk-on trading, which is more speculative. And in that ballpark, I would think growth stocks, even though most of them are in the NASDAQ, I have just noticed a correlation that when the Russell does well, my account's doing well. And I think mainly because I just consider it risk-on trading, small caps and so forth. So nice to see if that squeeze does end up firing along. Maybe this, weekly squeeze fires long into next year. It's below the zero line, but we'll have to see how it goes. But I mean, you literally consolidated, even taking out the squeeze, just from February, March of the year, just sideways action. So a lot of consolidation. It'd be nice for that to potentially fire along into next year. Maybe growth and small caps can be risk on trading. You would think going into a potentially higher interest rate environment that they wouldn't, but I think a lot of that's already been factored in. So I think small caps and risk on trade might surprise us going into next year. We'll just have to see. Last but not least, the diamonds. Diamonds are for the diamonds are Girls Best Friend. No, I was going to say diamonds is the ETF for the spider. I meant to put in YM so we can look at the futures. The Dow's actually been real strong. I think every index ended up red today except the Dow. I think the Dow was up roughly 100 points as far as the futures are concerned. So it's been pretty strong. Apple's been a big part of that, obviously, and obviously some of the other ones. Only 30 stocks, but when you have some that are almost worth $3 trillion, they're heavy. But when they do move, it can definitely move the indexes. Pretty solid. Like I said, 3 of the 4 look almost identical. So we'll just have to see. This one also has a weekly squeeze. I think going, especially with new money, that's typically, January is bullish. I'm thinking that we do end up having potentially new all-time highs on almost everything. Maybe not the Russell, but that would be good to see if that squeeze does fire along. So maybe we do end up seeing, ES 5,000, NQ 17,000, Dow 38,000 or 40,000 or something along those lines before we see any significant pullback. And obviously the higher we go, that percentage, say 10 or 15%, then you're kind of back to where you were down here. So not too crazy, but I do think that we will see some slowing probably leading up to the Fed as far as March and April. So we'll probably be okay. Quotations. I know you guys can't see that, but what is it? The bunnies, geez, I was going to say, not the quotation marks, the bunnies. Anyway, but yeah, I mean, the indexes overall look pretty decent here. I think new all-time highs, whether it's this week, next week, the week after, I think makes sense. So we'll just have to see how that goes. Let's take a look at the internals. Like I said, today was pretty much paint drying for the most part. You had a little action in the open. Like I said, there was relative strength in the Dow. I did put on a short in the Qs. I made a little, I think $150 or whatever, and I'm glad I got out somewhere around here, mainly because it was so slow, and that kind of made me a little nervous that we could, turn. And sure enough, 20 minutes later, there you go, end up, moving a little higher into the close. But I also did a short in the NQ futures, I think within the first 15 minutes of the day, and I got stopped out, funny enough, and sure enough, that would have been a good direction. That's why I like these color-coded candles, is because it kind of just tells you, how the trend was. If it's red, it's below the 34, and it was basically below the 34 90% of the day. And most of the indexes, except the Dow, were pretty soft. I want to say weak, but just chop. I think the profile shows out the best, so we'll look at that at the end as we normally do. But overall, nothing too crazy. Gold doing what gold does, absolutely nothing. Just sits around 1,800. Bitcoin dropping a good amount today. I think at one point it was at like 3,000 or something, 2,800. I know Mara and Raya got affected by that. Bonds, nothing too crazy as far as the other stuff we typically look at. It looked like a pretty decent reversal in the advanced declines, as you guys can see. That first 15-minute candle. I mean, let me see how far this goes back. You can see there's really not that many candles that are that big in one instance. It looked like we were gonna really get going, and that's one of the main reasons I didn't get out of Google early, was because that first 15 minutes or first 30 minutes or so was actually looking somewhat decent. NQ a little weaker, a little before the bell, but overall using the internals, not trying to just make a trade off of one point rather than multiple points. So put call opened up I think around 0.41. Did go a little higher. Keep an eye on that. If we start opening up in the low fours and close around there, we get into the threes and even the high twos, then it's safe to say we're probably going to see a pullback, and it might only be a day or two, but normally the put call gives you a good gauge. Not being able to pinpoint exactly, but if we open up tomorrow, the put call's at 0.3, it's safe to say maybe the rest of this week we're okay, but the following week we might see a day or two of selling. Once again, broadly speaking, I still think we'll be fairly bullish for the next month or so, but it doesn't mean that we're not going to have a down day or two. So it's just something to be aware of. A lot of people are getting anxious with Omicron and all that other stuff, and then it's kind of wearing off, and markets are going higher. I don't think we looked at, would that be number 3, right? Yeah, there we go. I have a financials trade. I think in a higher rate environment, I think going into early next year, I think banks will probably be one of the better ways of playing it. I had an initial move higher and it's kind of traded sideways most of the day. I do have an XLF trade on. I don't always play the specific ETFs for sectors, but if I think, I don't want to pick one, I'd rather just play the bucket. I ended up doing, I think the 38 strike, XLF, or 39 strike. XLF calls, I think, all the way out to April, mainly because I think that's when the rates might go up. So in anticipation of, them tapering and then potentially increasing interest rates, I think financials will benefit that probably better than anything else. So I'm looking for financials to continue higher. But anyway, this is one of my trades I have on. Healthcare has been pretty solid. Semiconductors, pretty solid. XLK was, overall, like I said, majority of things were just sideways. Nothing really too crazy. Industrials were pretty strong out of the gate and then just kind of held it, which seems to be kind of the norm. Basically sideways action to down. No real losers. Pot stocks getting hit again, which has just been crazy to see where they were. Tilray at $300 a couple of years ago, and then all the way down to like $7-8. But we'll have to see how that all goes. But anyway, let me look at. I wanted to show. I'm trying to think. I kind of want to give you at least maybe one or two tickers that either you're not familiar with, or it's like, oh shoot, it's that low, or oh, it's doing this. So one of the things I was personally looking at for tomorrow, potentially, not tomorrow, probably realistically Friday. This was the other thing I wanted to talk about. I'm sure most people watching are aware of tax harvesting and stuff, tax loss season and stuff. It doesn't start on a specific day, but I will say it normally goes into probably the second or third week of December is when it starts, and it accelerates into the end of the year. So if there's any stocks that you like that are down 50, 60, 70%, I hate to break it to you, but it's probably going to get a lot worse over the next couple days. Tomorrow night we're actually going to do we always meet up for something on Wednesdays. It might just be me, it might be all three of us. I'll see if the other guys want to join me, but it's kind of, I guess, a book map of what we want to or I should say not really a book map, that's software we use, roadmap of what we want to look at going into the end of the year and then into next year for tax loss. Normally some of the stuff that are bigger names will end up seeing some buying go into it. the beginning of the year. So that first and second week of January actually might be pretty good for some of these stocks. Not specifically BLI, but this is one. This is a big Cathie Wood one. I think they own like 10 or 12% of the company. This stock, I think, was what, yeah, $113 end of last year, and then here it is at 17 and change. So I'm gonna personally look at this one. I always get antsy, like, oh man, I got to get in. But it's like, if anything, if I can look back and I guess not sum up, but think of 2021 is the average like mindset of buying something at 30, 40, 50% doesn't necessarily mean that's a good buy-in, which is crazy because normally, you know, people are like, oh, Apple's, you know, on sale, it's 5% lower. You know, certain stocks are like that, but some of these other ones, man, it's like you think this is a great spot. You buy it at 50 something, and then it's at 30 something, then it's at 20 something, then it's at, you know, and then you're in the teens. So it's been tough. I mean, overall, that's the one thing I hate about the markets being controlled by a handful of stocks, is because if no one follows the markets, they think everything looks amazing because Apple's doing well and Microsoft, and that's great if you own those stuff, but there's a lot more stocks than just, you know, there's thousands of publicly traded companies, and 12, 13, 14 control like 40% of it. So it is a little crazy. But a lot of stocks have actually been, you know, are below their 200 or at 52-week lows. So even though overall, as far as a paint job and the way the markets look and the index is at all-time highs, like today, that looks great and it's good for papers and, you know, news. And if you're watching whatever news channel, and even if it's not like CNBC, the Dow finished up at record, you know, people hear that and they just assume it's positive overall. But there's so many things that have been beat up that I think it's good to be on top of for buying opportunities. Because if you believe in the product, the technology, the management team, the seat, whatever it is that you like about it, you really can't go by the stock price. Because sometimes, most of the time, there is a disconnect between what something's trading at and you know, what the company's doing. So sometimes you got to step back and because I'm down, you know, in certain positions I'm down 20, 30, 40%. And I thought I was getting a steal when things were down 40 to 60%. But I look at the chart and I'm like, man, this thing's horrible. But I go back to, has anything changed with the company? And the answer is no. For 95% of the stuff I own, no, nothing has changed. Whether it was, you know, I don't have BLI, but I was just mentioning that this might be one to keep an eye on your radar, you know, whether YouTube it, or Seeking Alpha it, or whatever the case may be, do some research for yourself. But, you know, stock going from 113 to the teens, and there's a few reasons that happen, but nothing, you know, detrimental, like the company's going out of business and you got to get out and run. But anyway, I just wanted to mention that one. But there's a lot of stocks that are down. One of the ones I'm thinking of going into, I'll give you, I guess, a freebie, is Peloton. I think hit 52-week lows again today. I mean, look at this thing. It, you know, going back into the end of 2019, we're literally back to those prices. You know, low 30s. So yeah, I got hit a little hard. I mean, that's crazy. I got when it was $18 a share. I bought Leaps $35 strike, like 2 years out. And sure enough, I sold like a week later for a small profit because I didn't trust the markets. And then we know how that turned out. But anyway, I mean, we're pretty close to pre-COVID levels, and I'm sure there's a lot more customers. There's a lot more bikes out there. There's a lot more subscriptions than there was at that time. So I think people will start buying Peloton at these prices. I'm one of them. We just got ours, I wouldn't say installed, but dropped off about 2 weeks ago. So I know for a fact that obviously their numbers are growing. So I was one that said when beginning of the year, there's no way this is worth $170 something a share, and it's probably going to get cut in half. But here you are, even lower than half. So this thing has been completely beat up. This is one that you might want to jump in and say at 35, but I wouldn't be shocked if it goes even lower because of tax loss. And that was kind of my point. Was, man, look at this. I love this stock, and I own the Peloton, and this is crazy. It's back to pre-COVID levels, and they have 2 million new, you know, more members, and they're making X amount more. This valuation, it's a steal. But realistically, if people bought at 170, 150, 130, and they just want to get out to offset gains from, say, you know, something else, this thing might get lower. I wouldn't be shocked if Peloton's at maybe $32 by Friday. And then that's when I'll be getting calls for probably February, maybe like the 35 strike or 40 strike or whatever, and just to see if there is buying into next year, because that's typically the name of the game. But anyway, I wanted to bring up BLI as one to potentially take a look at. a lot of these, you know, T-Doc, you know, pretty close to 52-week lows. Has that nice momentum of the squeeze setting up. I'm not going to play Zoom, but Zoom's another one, more than half. I think it's super close to 52-week lows. Yeah, what, $7, $8 off. So a lot of these, I think, with the momentum shifting higher and just, you know, how they are, I want to be shocked if you see some buying. I'm not going to go into all of them, but you get the idea. We'll go over that tomorrow night, come up with a list and a game plan for some of the most beat up names, and you know, get calls on them maybe 2 months out or whatever, just to see if there is some buying that comes in. Doesn't mean it always works, but we did it last year in the room, and I think we did 6 trades and 5 of them were profitable, and the one was just a small cap name that I got out for pretty close to break even. Funny enough, AMC was one of them. And we all know how that kind of turned out. So Activision, I'm just looking at my list. I did get out of Activision today. I'm pretty sure I mentioned it at one of these videos after it started. I mean, there wasn't really much of a reason for it to go from 105 almost to these levels. I'm not going to say it was cut in half, but pretty close. When it got down to, I think it was around $60 or so, 59 or $60, somewhere in here is when I decided to pull the trigger. And it, you know, with the rest of the market, did sell off a bit, but I figured a lot of the stuff that was going on behind the scenes would get resolved, or people who make these decisions that control billions of dollars aren't going to care. You know, where is the stock going to be in 2-3 years? Are video games going to expand? Are they increasing this? Are they doing that? I think that's ultimately what's going to prevail. And here you go. The stock's been up, I think, 12 days now in a row. My target was the 50, and it closed like right on it, I think, right? Come on, 66.58. Yeah, so like right above it. But that was my target. It's a little extended now. And even though I was good till March, I just figured I would take the 30-something%. I was down 50% at the lows, like either this day or one of these days when it was getting back. I was down like 40-50%. So to kind of full circle it and sell it into some strength is good. It sucks when it does keep bleeding, but that's why you go further out to try to give yourself the gift of time. Anyway, let us end on the profile. Like I said, I mean, going back all the way from down here, these lows to all the way up here, very quick. It is not too surprising, as we were one time framing higher this entire time, that we balance, trade sideways, whatever words you want to use, and basically overlap where the VPOC was from the previous day and where settlement was. So the fact that the most volume was down here and the most time and half back and all of this is pretty close within this range isn't too crazy. I wouldn't really consider today more than just balance. And you can kind of feel it the longer you trade, you know, aka a boring day where the range, I mean, we did see a little bit of buying in the morning, obviously hitting those highs, and then just came back down. And, you know, reds where 30% of the top volume was, and that's, you know, in this volume area, and it's kind of overlapping this one. So you have the most time at 47.80, the most volume. That kind of shifted towards the end because it was like, it was, where was it? I think it was 47.86, or maybe it was up here, 47.88. I think it was 47.88 for majority of the day. And then towards the close, obviously volume picks up a bit, and it did drop a little lower. But I would have liked all these to be above halfback, which is that gold line right there. But it's not the end of the world that, you know, we didn't come back all the way down here. We didn't, you know, undo this entire day or something. So I would consider, structurally speaking, I would consider this and still bullish and just taking time off the clock, you know, digesting the move, if you will, whatever word you want to consolidate. There's a million different words for the same, you know, concept, and that's just basically sideways action. And we did technically hit new highs. So even though it was boring and it felt, you know, especially in NQ and some other ones, a little weaker, this wasn't really that bad of a day. And that's why I like the profile, is sometimes when you just look at, like, if we look at that NQ chart, even though this is the ES, or even the ES chart, it looks horrible. Like, oh man, look how, you know, we were down and this and that. And then, you know, you look at the structure and just where the most time and volume was spent, and you know, it paints a different picture. One that makes me think I'm not really too worried about price. And, you know, the range we were in was what, maybe 30 points at the most. So not too surprising, especially once again, just to show how far we've come, you know. VPOC at the top, VPOC at the top, VPOC at the top, VPOC at the top. So just a lot of buying into the closes, and, you know, it's slowed down a little bit. So anyway, that's basically what I got for you guys. as usual. I wanted to be a quick video, and it's 25 minutes. So anyway, hopefully my time has been valuable for you. If you want to try to join us by tomorrow so you can be in that webinar, just make sure you're squared away on the website. I'll leave our Facebook group and the site and all that information in the description so you guys have that. On that, I'm going to head out. You guys have a wonderful night, and I will catch you at the next one.